Hey everybody, happy Monday! Just wanted to come to you, give you a little background and insight on what took place in 2022, at the end of 2022, and kind of give you an update of where things were the end of last year, where I think things are headed, and I don't know, we'll see what takes place. Because one thing we know, we are just one pandemic or virus away from everything going completely upside down and total chaos. Nevertheless, let's look into what happened in 2022. These numbers are from Chandler Reports right here, which is a division of the Daily News, and as they say, the most trusted source in real estate. So this is from their Pulse Report. I subscribe to it and get an update on it every month. So December, home sales activity fell 30% in Shelby County this December. And that is compared to 2021, December of 2021. Prices fell 8% for the month. So prices were 8% higher last December than they are this December. This is like one of the only areas that I'm seeing a price decline right now, which is interesting because previously prices had been up about 3 to 4%, even though sales volume was down. But I think we're kind of finally hitting that slow period to where now everything is going to start evening out as we reach back where rates started to increase last year, back in March of 2022. As rates started to increase, I think our numbers are going to start seeing more of a leveling off and even decline compared. So the number of homes sold will start to even out from 2023 to 2022 once we hit March and beyond. And the prices will also do the same. We'll start to level out a little bit. So anyway, median sales price was $180,000. 27% of the home sales recorded in December were valued under $100,000. That's telling because the number of home sales valued over $300,000 were down 37% in December. That is huge. So basically what's happening right now is homes that are $300,000 and above, which is basically all the suburban homes and homes in East Memphis and areas like that, are not selling. They're sitting on the market. And it's becoming more of a normal market where homes sell 3 to 5 months. And listen, that is okay. That is what normal home sales are used to. That's what it is. So if a home sells between 45 and 90 days, that's amazing. Like, that's a very desirable outcome. We were just upside down in total chaos the past 2 years. And so experiencing a home sale in 3 days or 24 hours is not normal and it's not sustainable. It was never going to last. And now we're experiencing a normal market. It's still a seller's market, but it's a normal market. So what's happening is if your home doesn't sell in the first weekend, which typically there are about 10% of homes that still sell in the first weekend. So I don't think that your home wouldn't be one of those, but it's just a lot less likely that it's going to happen now. Just expect to ride the wave, right? You're going to ride it out. It could sell in a month. It could sell 2, 3, 4. We don't know. It just depends on the people who are buying in your market, in your neighborhood. And I'll get to some neighborhood data shortly here, but it just depends. So just ride the wave, be okay. Just lower your expectations, set your expectations, however you want to say it. So that we can have a realistic approach to real estate in 2023. So let's talk a little bit about foreclosures. Foreclosures last year, December, 14. This year, December, 32. Okay, so if you want to go by percentages, you can write the narrative. Foreclosures are up 100%. They've doubled in a year. They're still 32, okay? It's still 32. It's not like it's a massive amount of foreclosures hitting the market. And the reality is these institutional buyers, which are just killing the market under $100,000 right now, they're just killing the market down there. Everything is becoming a rental home. There's basically no affordable homes available anymore because investors, these institutional investors, are going up, buying everything from out from under local investors, out from under owner occupants. And that's what's happening. So even these foreclosures, they're never hitting the market. They're being foreclosed on. These asset managers, these banks that are foreclosing, they have these institutional buyers in their pocket. They market it to them. They buy them. They never hit the market for you people like you and me. So just be aware, you're still not getting foreclosures. Okay, it's not that type of market right now. New homes were actually up 28%. So what that tells me is a lot of the homes that are selling over $300,000 are new construction, which again, it hurts existing homeowners, right? So homeowners that are trying to sell, that own your home, you're trying to move, you got to move. It's taking a little bit longer to sell those homes because over a third of the homes that sold in December above 300,000 were new construction. So you need to be prepared for that. You need to understand like what you're doing to your home absolutely matters right now if you're a seller. You want to sell it quicker, you've got to make the updates. Take some of that equity out if you haven't tapped into it already. Do some renovations to the home, then sell it. It'll sell it faster. So even though you're not going to enjoy the updates and the renovations, you'll still reap the benefit of selling your home faster. It's going to reduce the cost that you have to maintain the home during the period that it's on the market. So take advantage of that if you can, if you have access to it. Get a HELOC, do something, be able to get some of that equity out, renovate the house, and then sell it. Okay, Fayette County, your home sales activity was down 47%. Wow, in December. But prices were actually up 17%. So it looks like there's a lot of new homes that are being built out there that are increasing the prices, but there's just not a lot of activity so far going into Fayette County. Tipton County, home sales were down 34%, which is about what it was in Shelby County. And your home sales prices actually dropped 11% from December of 2021. Okay, so let's go to Shelby County, or the areas here locally from MAR. This data is all from MAR. It's all pulled from our MLS and what was sold in the area. So year to date, this is for the entire year last year, for all of 2022. We saw the areas that had the best return or the best increase of number of sales that were sold is Raleigh, South Memphis, Whitehaven, Parkway Village, Oakhaven, Millington, and Fraser. So what does that tell you? That tells you those are a lot of areas where the home values are less in the marketplace. And so what's happening is, again, these institutional investors are coming in, buying up the properties, and they're turning them into rentals, again, which is not good for affordable housing, and it's not good for the future of the real estate market. So how do we address that? I don't know. Canada just basically said no foreign investors can purchase anymore. I don't know if that's the answer. Definitely will drop the prices because you have less competition, you have less buyers in the market, home prices are going to go down. So that would help in the immediate, provide more affordable housing for people who are wanting it. But I don't know that that's going to help the long-term prospects, because eventually, unless we're adding new homes on the market in those price points and we get construction costs under control, we really aren't going to see the benefit in the long run. So short-term fix to a long-term problem that we're still going to have. But anyway, that's Canada. That's not the United States. Whatever they say in Canada. Go Canada. Go Canucks. Whatever. All right. So let's talk about a few other areas. The areas that were hardest hit year to date. For all of 2022, the areas that really took a big hit, actually, Arlington, believe it or not, it's where I live. Arlington had the biggest decline. 36% drop in number of sales was in Arlington. The second largest drop was in Cordova. Cordova saw a 20% drop in the number of sales. Germantown, 18%. Collierville, 15%. Let's see, Fayette County, 19% drop. Tipton County, 11% drop. Southwind, 22% decline. I mean, so a lot of these areas where you have more expensive homes, pricier homes, Midtown, 10% drop. That's where the decline took place. So the market is shifting. I don't know if you're paying attention or if you can see it. I'm certainly seeing it. The market is shifting to where what we're seeing is a lot of things of institutional, big money investors coming in, purchasing up a lot of the smaller value homes, and they're turning them into rentals, which means the only thing that's available to purchase are the higher end homes. So we're really eliminating the first time home buyer now. I mean, it's very difficult to buy a home right out of college. I mean, honestly, it's practically impossible unless you have a really high paying job, because the only thing that's available to you is $250,000 and up. I'm working with buyers right now. They're struggling to find homes in that $250,000 price point because there's just not a lot of inventory out there. There's not a lot of good inventory out there. So I think we might see some of the renovation loan type stuff coming back around soon, because people are going to have to get a home and they're going to need to renovate it. And in order to get access to it before these institutional investors do, you're going to have some new tricks and new things to pull back out of the toolbox to be able to make that happen. So anyway, that's basically the update. I know I went long, it's 10 minutes, but just wanted to give you guys an update. I do think that we're on a downward trend right now with prices and rates. I think by the end of the spring, kind of late May, I think rates will be between 5 and 5.5%, which will be good. But again, prices are still going to be high because we're not adding enough new inventory to the market. And until we start to add more affordable inventory into the market, and when I say affordable, I mean under $250,000, which is crazy because in 2015, affordable was like under $100,000. That's just how much prices have increased over the last 8 years. But we're going to have to add more inventory to the market, new inventory, before we just continue to recycle the current homes. Because as these institutional investors buy up these homes and they hold on to them, they keep them in their portfolios, that means they're not going to recycle back into the market for a long time. So we're losing inventory as these institutional buyers are coming in and buying up stuff, and builders, rightfully so, are nervous about building new homes, getting stuck with them, losing money. It's just a really difficult time in the marketplace right now. So if you are a realtor and you just got your license in the past 2 years, all I can say to you is I hope that you didn't leave your day job, because it's going to be very difficult to sustain a career in real estate over the next probably 2 years, because I just don't see prices coming back down, and the rate environment is not going to be conducive to a lot of activity and growth. The past 2 years, anybody that wanted to get in real estate could get out there, could make a couple $1,000s here or there, but that's just not happening anymore. With homes sitting on the market longer, less buyers in the market, it's becoming a lot tighter, and it's a struggle. I'm not going to lie. It's a struggle for me, and I have a lot of clients, and I have a lot of history, and I've been doing this for a long time, and it still is a struggle. I mean, that's the reality of it. So hope you guys are informed. I hope you enjoy these things. I know I went long, but hey, hopefully you're listening to it on your drive home today, and you didn't waste too much time. Anyway, all right, let's go, Grizz. Going to be down there tonight with my kids. We're actually the halftime entertainment. So if you go to the game tonight, stay in your seats at halftime and watch my 8U team from Lakeland get out there and hustle for 6 minutes and play basketball in those 10-foot goals in that massive arena. It'll be fun. I'm looking forward to it. All right, deuces.